All right, guys. So today is day 4 of the boot camp, right? And we are going to cover fair value gaps along with um, some concepts that go hand in hand with fair value gaps, right? So that's going to be uh, institutional candles, right, and engulfing candles. So let's just give out some definitions first, right? So fair value gaps, right? These are gaps that the market likes to fill before moving the opposite way, right? Institutional candles are large candles that cause displacements or aggressive moves for the market, right? Or in the market. And then we have engulfing candles that are two candlestick patterns that completely covers that previous candle, right? So if you have two candles, right, your engulfing candle, that second candle is going to completely engulf or cover that last candle, right? So it's going to be the wick and the body, right? And then I'll show examples of all these, right? This is an engulfing candle right here, right? You see how this candle completely covers this candle, right? So this would be an engulfing candle, right? And then we're always reading the chart from left to right. All right, but main topic at hand, fair value gaps. So let's mark this up, right? So here we have gaps, right? That was created by, in this case, institutional candles, right? So when you see institutional candles are long body candles, right? These type of candles can be engulfing candles, right? Or they can create gaps, right? Sometimes institutional candles can be engulfing candles and create gaps, right? This is where market analysis is very, very important, because you have to know the purpose and what took place for this specific gap, or more so the institutional candle. What was the purpose here? Because an engulfing candle, and a fair value gap, and an institutional candle all play 3 different roles in the market, right? So gaps, right? Gaps are like magnets, right? We know that price likes to come and fill gaps and then go the opposite way, right? So we know when these gaps are created, we want to see something like this, right? However, when it comes to understanding structure, right, the pullback doesn't always have to come back to our order block, right? If it comes right here, structure is still valid. If it comes right here, structure is still valid. If you see in this case, the high was right here, structure is still valid. So, well, let's draw it out, right? Then keeps going. Structure is still valid, or it's maintaining, and then it drops off. Now, in this scenario, these institutional candles, right, were displacing the market. Let's look a little bit previous, right? We were in an uptrend, right? So when you see these institutional candles, we know, okay, the large market competitors, right? They are aggressively selling the market. That's what institutional candles are, right? When we say institutional, right, or institutions, right, we're referring to our large market competitors, right? So these are the banks, right, or just large investors that have the money to move a market, right? So these large market competitors are taking out these buyers, right? Because these are people's stop losses, right? So boom, 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 you're taking them out, right? They're getting all their monies back. right? By pump faking the market, selling the market, aggressively selling the market, right? But when they use this move, they leave behind gaps, right? Long body candles tend to leave gaps, or institutional candles tend to leave gaps, right? There can be scenarios where it doesn't, right? But usually, like just identifying our long body candles, they are leaving gaps, right? Which is a good thing for us traders to use as tools to our benefit, right? Because we know that price likes to come back and fill them before going the opposite way. Cool. So in this scenario, the purpose of these candles was to shift the market, right? Now we're in a downtrend, right? So now if I know, okay, we have a break of structure, right? This was we broke structure to the downside, right? Let's mark this on. So now I'm going to draw my fib. All right. Just this. So in this case, right, I have my IC or my ICs, right? My institutional candles. I have my OB, right? I have two OBs in this scenario, right? The last up candle before the down move. You can have multiple as long as it's within the structure, which it is, right? So now what I would be expecting is price to come all the way up here and go down. It did, right? These fair value gaps, right, are magnets that I would like to see on my side, right? Because if the market pulls back, right, it's filling, and then the rule for this is once it fills, goes the opposite way, right? So I actually have a fair value gap that comes all the way to my order block, right, that wick. So this would be a great entry if I had my pendant, right? But of course, right, the market doesn't always move how you want to. However, this does provide opportunities eventually, right? So on this move, or I'll leave this up here. On this move, right, I didn't get my entry. However, being that these were institutional candles, right, they shifted the market. And now the market is respecting that shift. So let's keep going. Let's keep looking for setups. All right, got my new high, 2 candle close, my new low. Let's draw it up here. Boom. Right, in this case, let's clear this up a little bit. All right, in this case, my order block is out the zone. It's not valid. Can't draw nothing up. All right, cool, let's keep going. Right, I get a high, I get a low. I get a high, okay, I'm seeing something a little bit fishy, right? Don't know what's going on here. Then I get a low that breaks, right? That breaks through this low. This low is lower than this low. Okay, cool. Right? So now I can draw my fib. Now, IC's in the zone. Or my OB candle is in the zone. I have, let's see, some more gaps created, right? I have a gap right here. Let's highlight this gap. A small gap right in there. And if you can actually see, price came to this gap. Fill the gap, reversed. Right? This is what you want to see. you want to see when you have your setup, right? So let's just go over the steps, right? We were bearish. We have our previous high to the newest low for our fib. We look at our order block. It's in the zone from the 618 to the 886, right? We have a gap here that's created that's close to my order block, right? Which would give an attraction, right? It's a magnet. So we're going to pull back to our magnet. Soon as it hits this magnet, drop, right? You'd be risking in this scenario about $630 for, I mean, yeah, come on, man. It's crazy for $7,000, $8,000. Man, that is really good, really good, right? That's just, again, the power of these gaps being magnets, right? And let's even look at these gaps that's up here, right? Even though we understand that these institutional candles created gaps, right? These candles were designed to displace, right? Now, if we look at structure on a broader scale, right? At some point, we can see that price is coming to fill these gaps, right? So I should be expecting something like this, you know, following structure, filling in these gaps, right? Now, engulfing candles, right? Let's take a look at some engulfing candles. Let's see if we can find one. Ooh, this was close. This is close, but not quite. Let's see. This is close, not quite. Is this it right here? So, technically, this right here is an engulfing. Oh man, I lost it. Dang, I lost it. It's fine. Okay, actually, perfect. No. Dang. Engulfing candles are not the most common, right? But when you see them and they move and they're and you can help them. Okay, right here. Boom, perfect. Engulfing candle. Y'all see this candle? These two candles right here? Oh, let me get this circle. So this, right? This candle completely swallows up this candle, right? The wick and the body, right? And this is the lowest point, right? Now, eventually we're going to get into how to identify what we call swing lows and swing highs, right? But right now, the 2 candle close rule is what I want y'all to work with in the beginning, right? Because we're gonna be adding on knowledge as we go, right? But this being the lowest point, right? This would be the swing low by definition, right? When this candle engulfs this one, this shows a sign of the market changing direction, right? Or being bullish, right? This is a bullish engulfing candle, right? So as you can see, based off this candle, what did the market do? Shot up, right? Off of this engulfing candle. We were already sort of bullish, right? And here, let's see. Let's look at the overall trend. What's the overall trend? Let's click up. Let's see what we were really trying to do. All right. So clicking up on our 1 hour, we were in a downtrend, but now we're chasing these gaps, right? So we're on our highest time frame, right? Starting to get bullish. So down here, right? This engulfing candle, right, is supporting our bullish trend. Now, if this was, let's say if this candle was let's say these were two red candles, right? And then we had an engulfing candle. This will be perfect for a setup, right? Because if this is a bullish engulfing candle, right? Now our order block could be perfect for a pullback and then continuation in that trend, right? But again, these are just candle concepts and understanding the importance of what candles can do, right? Candles that leave behind fair value gaps, those are magnets that price likes to come to fill if we're going the opposite way, right? We have our institutional candles that move the market, right? Those are market movers. Those candles you will typically see involve a break of structure in some way, shape, or form, right? It's usually going to be a long body candle, right? Then we have our engulfing candles, right? Our bullish and bearish engulfing candles that can strongly move the market. Let's see if I can find a bearish engulfing. Oh, right here. At this point, we have this candle engulfs this candle. What does it do? It starts the pullback, right? And honestly, let's see. No, this order block wasn't in the zone. But if y'all can picture how if this order block was in the zone, it gives setups. Even though it's a short setup, right? That's trading the retracement. These engulfing candles are very, very powerful if you can spot them. Right? This is a bearish engulfing that you can catch a little sell, but overall on our 1 hour higher time frame trumps all, we were bullish. So I don't advise trading against the trend. This is just adding to your toolkit as a trader, right? So in this scenario, if on a higher time frame we're starting to be bullish, I would look for a bullish engulfing candle for my setups, right? I just wanted to show an example of a bearish engulfing and a bullish engulfing, right? Then also, all right, show fair value gaps, right? Even in here, fair value gap, right? Wicks didn't come in, Wicks didn't come in. What did price do? Come and fill it, right? Now it's filled. It reversed a little bit, kept respecting the major trend, right? We were bullish. So yeah, the thing with identifying gaps is not hard, right? It's not something that is like super crazy to identify, right? You could just go through marking up gaps, right? Marking up your magnets, right? That's something that before you should enter a trade, you should be doing. You should be looking for the gaps. Where's the gaps? Where are my magnets at, right? Could I possibly have a magnet that's going to bring me back to my order block, right? Am I possibly having a gap that's a goal for liquidity, right? Which we'll talk about next. And so, yeah, that's the main. I'll continue to go over examples and setups where you can use fair value gaps, but definition wise, right? They're just gaps in the market that is equivalent to just magnets, right? Then again, your institutional candles, your long body candles, these are market movers, right? If this candle, if I'm in a bullish uptrend and I have a institutional candle that closes above the previous high, right? So I'm gonna just draw that out. Right, if this candle, whichever candle that closes above this, let me draw this out. Right, if I was to see this, right, great sign for continuation, right? So if my higher time frame is bullish, right, let's say I entered the trade down here. Let's say if I have my pending order down here, right, I caught this buy up, and this candle is an institutional candle as well and closes above this previous high, that's a sign for continuation, right? Meaning I can hold this trade. Not only am I aligned with my higher time frames, now I'm getting institutional candles that's closing above my previous highs, right? Giving me a good signal for continuation of trend. Now you can catch this one entry all the way up. Mind you, this is exactly what it looks like on the charts as far as risk to reward, right? Where's my tool out down? Right? Entry down here, risking 37 pips, 42 pips, right? $420, right? For what? 2,000. This is exactly what it looks like on the chart. So look, anytime you get into an entry, right, look for an institutional candle that closes above the previous high, right? And you're trading along with higher time frame confirmation, right? You just waited for the breaker structure. In this scenario, you'd be on a 5-minute waiting for the breaker structure to the upside, right? You click on your 1 hour, you say, okay, we're bullish overall, and I have an institutional candle that closes above this previous high. Oh yeah, I can hold this trade, right? Now you always want to be safe and steady. Bring up your stop loss. Like let's say your stop loss is always going to be at the bottom of the IC candle, which could easily be right here, right? Stop loss is red. You can always drag up your stop loss, right? And this stop loss will turn green because now you bring your stop loss in a profit, meaning if this trade comes back and it taps you, right, you'll exit the trade, but you'll exit the trade in profit, right? You'll exit the trade $300 in profit if this was your stop loss and you moved it up, right? You could also move your stop loss to where you're into the market. That way the trade becomes risk-free. So you could only gain money, but you wouldn't lose anything, right? So again, this is just understanding how to use these candles to your advantage, right? How to understand different things that take place in the market for your advantage, right? So just be on the lookout for these engulfing candles, right? For your entries, or you know, even for setups, right? For breakup structures. So let's say you're getting something. Let's see if I have an engulfing candle that's gonna break structure. No. Let's delete that. Let's see if I have an engulfing that breaks structure. No. Ooh. Oh, perfect. Let's see, I gotta scroll all the way in to see this. Yep. So this is an engulfing candle right here. Boom, boom. What happened? This was perfect. This candle, we have a bullish engulfing candle, right? Our OB is in the zone. Normally, right, we want to enter right here, but technically speaking, this is in our zone to pull, right? Came past the 702. Our 702 is highlighted red for a reason, right? That is a place where you can put your pending on, right? Especially for gold, right? Just the difference between entering right here and entering right here is how much you're risking, right? So in this scenario, you'd be risking $80, right? In this scenario, you'd be risking $14, or not $14, $140, right? Now, that ain't nothing. That is nothing in the trading world, right? You just want to always make sure you're understanding your risk. But you're risking $140 to make even from this entry, right? $1,000. You was risking $140 to make $1,000. The setups always come. That's another thing I want you guys to see, right? The power of an engulfing candle in the direction that we're going, right? Understanding we have gaps closed above this previous high, continuation, closed above this previous high, continuation, right? Until we get an institutional what? Break of structure. And literally this is another entry for the sales if you wanted to do it, right? Because we know our institutional candles are trying to take out the buyers, right? If I would have caught this buy, this is trying to come back, this is chasing my stop loss, right? But I would have already TP'd out, right? That's $1,000 from this one entry. But let's just go and look. Now we have our aggressive institutional candle that did what? Left behind a gap, a magnet. Cool. Now I have a magnet towards my OB candle, my entry, right? My OB candle's in the zone. I can draw it from this since I have a break of structure, right? This is my valid low, and this low is lower than this low, meaning, right? Hold on. Lower low, candle close, right? We have permission to go the other way, right? Even though overall we're bullish, I can still catch this trade, being that I have an institutional candle to back me, right? What did it do? Came, touched my OB, perfect. Came and touched my OB perfectly to the T, right? A very, very low risk trade at that. Risking $160 for 1,000. Guys, the strategy is crazy. Once you see it, right? And you're using these additional candles to help you. You never want to just blindly enter the market without seeing these candles that can help your case. That's what you want. You want these confirmations, right? You want these things to be included in what you're about to trade. That's why you don't trade every single setup that you see. These moves, right? I'm at the point where I can just go and I can see stuff and identify it. But all this stuff is, all right, I know what to look for. As soon as you get to the point where you know what to look for, you guys will be overly good. I only, like, seriously, guys, like, this is just the power of understanding. Okay, this was an institutional candle used to drive price down, right? Even though my higher time frame were bullish, I can still catch this sale, right? Being that I have this institutional candle back in my cause. This institutional candle also did what? Left behind a gap that price likes to come and fill, right? Now this gap was huge, meaning I have a lot of wiggle room, right? And price likes to fill the whole gap, right? Not just half the gap. Oh man, let me get my tool. There we go. Right, look at this gap. Huge gap. Huge gap. Price came back and filled to a T. Soon as it filled it, what did it do? Go the other way, right? But this is where I enter the market. I enter the market right at the end of the gap, right after price filled up the gap, right? So this is how you find A+ setups, right? You want multiple things to support the reason why you enter the trade. You just don't want to, oh, I see it going up, let me click buy. No, you're trading without any type of protection, right? You're trading without any type of analysis, right, to support your cause. It's almost like arguing a court case, right? I'm entering the trade because I see this, and this. Therefore, I enter the trade. You're not just entering a trade because it's like, oh, it's going up. I understand structure. Let me go ahead and click buy. No, right? Because at some point, you never know when the institution is going to insert itself. You never know when it's going to say, okay, it's time to get our money back. You don't know this, right? You can only predict the market up until a certain point. We know that structure should follow up until a certain point. We know that higher time frame trumps all, but we can definitely have breaks of structure on our smaller time frames, right? Because overall, these candles close in smaller increments versus our higher time frames. So on a broader sense, right, this little pullback is not a fair representation of what's actually occurring, right? Even though in this scenario, our structure says we broke structure, I can catch my little sale, but we're respecting the buys. And even then, nah, never mind that. Yeah, we're bullish, right? We're respecting that more than anything, right? Now, our next boot camp is going to be covering liquidity. That's what I was about to talk about right here, but I don't want to add that. I just want to keep this. Hopefully, you guys were able to understand all these different concepts, right? Again, just briefly, we're fair value gaps are gaps created by the market that price likes to come back and fill. Our engulfing candles are two candlestick patterns, right? Where that second candle will fully engulf that previous candle or fully cover that previous candle, the body and the wick, right? Not just the body, right? The body and the wick, right? Cool. Then we have our institutional candles, our IC candles, right? This is where large market investors or banks come in, right, to drive price in a certain direction, right? You can either have price driven to continue the trend, right, when we close above that previous high with an institutional, or if we have an institutional candle that's going to close below this previous low to catch our sales, right? This is just these institutional candles move the market, right? And our OB candles is what those usually these institutional candles will come and bounce off those order blocks, right? So again, just piecing this thing all together, guys. I guess the next bootcamp video will be liquidity, and I'll see you guys then.